because we're looking at it in terms of resilience of the asset class. So Dagmara, why don't we start with you? I guess just in terms of your view on it, looking at the investment side, how resilient is it in comparison to other asset classes? What's your take on it?
First of all, good afternoon, everyone. I'm very grateful for this opportunity to be here and have this discussion and share our views and on the subject. In terms of the resiliency, obviously the aging demographics do not lie. So in long term, definitely the aging population is going to increase the demand. This actually converts also into stable returns of this asset class in comparison, for example, to student living. We could experience this situation during COVID crisis, that, for example, there were a lot of vacancies in student housing. In the situation for the student living and for the seniors, there is this essential accommodation for them. So, or whether this is on nursing homes, this is their place to live. So it's not that they are going to suddenly relocate; they are staying where they are. We all know that this is not easy for the seniors to also move. So aging population, this is one thing, and which is causing the increased demand. Another aspect is also advancements in technology. This is something really important, and the development of AI, which is also going to be really supporting this asset class with the deployment of the technology. So yeah, I think this is the main subjects I would like to mention about.
Okay, good. And maybe, Nikolai, let's just pick up with you. Obviously active in different areas, but pick up a little bit, I suppose, on what you're seeing in terms of some of the fundamental investment trends here, particularly in Germany, but the other areas where you're active.
To be honest, right now we do see very few investments in the market, not only in Germany, but all over Europe. Because of several reasons. One is the rising or increasing interest rates. Right now, 4.5 to 5% we have to face. On the other hand, especially in Germany, we do see some operators, especially nursing home operators, filing for insolvency. Also because of several reasons. One big reason is the increasing costs, which affects electricity, heating, and also staff costs. Since 2022, we have a minimum pay for qualified staff, which forces the operator to give a adequate salary to their employees. But on the other hand, it does affect the operators in a very crucial way. On the other hand, the operators, they have the opportunity to renegotiate the costs with the social welfare, with the nursing insurance, but this takes time. And right now we have a time gap between applying for the costs, for the remuneration of the costs, and on the other hand, they have to fill this gap, and they have to cope with the situation that right now a lot of money is missing because they have to pay electricity, their staff, etc. So right now, because of that, we do see very, very few investments and new projects, especially in nursing homes, which means that alternative investments in assisted living is more popular, and we do see few more investments. But on the other hand, we also do face the increasing interest rates, not only on our side as an investor, but also on the side of the project developer himself. So right now, as an institutional investor, we are not capable to pay the full construction costs of the developer. So it's not, we are not able to pay their development, and there is no more surplus for the developer at all. So also in terms of assisted living, it's very hard to establish new projects. So very few investments right now.
Okay, good. And obviously, some of those trends, Kasper, are across the world and particularly across Europe in terms of the interest rate, and those kinds of things that are more challenging from the investment side. But tell us a little bit about your markets. And again, are there unique challenges there? Are there different opportunities maybe to the ones that are being seen in other regions?
Yep. I think compared to the story we just heard from the German market, I think it's slightly more positive from the Nordics. We benefit a little bit of having this funding model where all the payments towards these care operations is coming from the municipalities, and they're still able to pay it. And there's really no difference in cost whether you go for a private or a public-owned care home, which is quite a unique model, and which is kind of also proving a little bit of that resilience that we're talking about in this session. Two of the big transactions that have been done here in that last 6 months was ourselves buying a care home portfolio of 6 care homes in Denmark, and then Nordic Real Estate Partners just acquiring 25 care homes in Sweden. So some of the few transactions that have happened have been in this space, because I think people still see that as more interesting than other types of things, due to some of the other things that we have talked about, the demographics trends. So slightly more positive. That big need for new beds is still what drives us all and make it interesting for investors to go into the market. And then of course, because we're heavily relying on public funding, then we're also a little bit challenged towards changes in regulation. So that is a fact that you then have to have a look at the same time.
Okay, good. And let's pick up that regulation side, Stefan. You mentioned before briefly that you're looking at that across all the different regions. But are there some regulatory regimes in different countries more advantageous in terms of investors? Are institutional investors looking more closely at some than others? What's your sense of, the comparison between the markets?
Well, the main problem is that the regulatory groundwork is not very investor-friendly, because many people, in particular politicians who are in power, sometimes try to prevent private investments, because they say you should not make money out of taking care of elderly people. And that's a real mindset, and this is reflected sometimes in the regulations all over Europe, which I can see. And in the report we produced covering the major jurisdictions all over Europe, we identified that in every country at least 2 different authorities are responsible for nursing homes or for care homes to monitor whether the quality of care is correct, or whether the building and the construction is in line with the regulation. And I think that's something which for the future must be much more easier for putting investors in a position to decide where to invest. And that's a real obstacle when international clients are coming to us and asking, we want to buy some properties in Germany. The first question is, where are they? Are they in one federal state or in various federal states? And if they are in various federal states, you remember what Frederick said this morning, then it's really complicated. So there are so many different laws to adhere, and it's really a difficult situation in the moment. This can be for anybody. It'd be interesting to see whether or not there's, obvious views in terms of investor sentiment, whether that's towards Germany, UK, Nordics, other markets. Does anybody get a sense of where people are looking? And I accept that point that you make there, Stefan, about the challenges around the regulatory side. But is the investment capital looking at specific areas, or is it really, as we heard a little bit this morning, trying to find product to invest in? What's the situation? Anyone can pick that up.
If I might, just from my side, based on my observations, I think, the most popular countries with the most favorable healthcare systems, the most stable regulations, taxation system. So I would mention that this is the Netherlands, this is Germany, this is France, this is the UK. This is, from my experience, the most popular jurisdictions in Europe. And then on the other end of the spectrum, obviously, is the CEE region and Poland, due to the same causes.
But if we look at Poland, for example, do people see that as a an opportunity coming up where they can come in early into the market, or is there really a sort of no, we'll wait and see how that develops? What's the situation?
Well, as in the presentation of Richard from Savills, it was shown that the interest in Poland is very, very limited at this point in time. My understanding is that a lot of investors are very cautious, also because of the political tension across the border in Ukraine. But at the same time, and based on my experience, when I speak to institutional investors, when I speak to funds, I speak to family offices, they are interested in entering the market and getting a portfolio transaction, a larger ticket, which is unfortunately still very much on the development, and these kind of deals are not available in Poland. So it's much easier to acquire a single asset, but unfortunately it doesn't meet the requirements of institutional investors. So this is a little bit of a situation, catch-22, that we need to solve. We need to create these portfolios for the larger operators and investors to be interested in the market as well.
Okay, good. And maybe just looking at, I suppose, we had a little bit about reputational risk, when we were looking at risk in the earlier one. How important is that from the investment side? Do you think that is a barrier to some investors coming in, or on the other side, are there people who are looking at it as an impact investor and so therefore happy to take those risks?
I think there's definitely both sides to that. It is, especially for new investors that have never been invested into this sector, that is something that they're thinking about. We have represented Danish pension funds that were not willing to have assets with commercial operators. They would like these non-profit operators because they had the take that the reputational risk were better on these operators. So that's definitely a consideration. I think we can explain it, and also being kind of the landlord and having the operator in between, then there is kind of a second step before it hits you. But also in a market with smaller operators, then that reputational risk towards that operator can quickly kill him. So that's of course also something you have to bear in mind.
Okay, good. Yeah.
Yeah. So before 2023, it was no big deal for our investors in terms of reputation, because there were no negative headlines about operators, etc., in the German press. But since the filing for insolvency of big German operators came in the first quarter of 2023, they got more cautious, and right now it's very hard to find new investors for senior housing, to be honest. It's more about medical office buildings, but we are not talking about that right now.
We can talk about medical office buildings, that's fine. But it would be interesting maybe to pick up, just in terms of the point that you made there, Stefan, around the regulatory side, because I was interested when we were looking at the anniversary of EPRA a while ago, and there was a film around that which talked about how it had started, and that it started by a very small group of people in a cafe in Paris. And EPRA has been very successful about reaching out, trying to change regulation, bring that together so that it's successful. Is there something that we as an organisation and as members and other interested parties can and should be doing to reach out a little bit more, Stefan, or is it just going to be a hideous exercise? I suppose what's the sense that you've got of it? Because obviously you're based there in Germany and you're seeing that there are these problems for institutional investors who might want to come in, but there's just barriers to them.
Yeah, that's right. But I think it would be a too big task to find a unified law all over Europe or all of the whole of the world, because the markets are too different. So the social security systems are different in each country, in each member state. Then all the taxation laws are different. The construction laws are different. So to have a unified regulation, I think it's not possible to have it. But what really would be advisable from my perspective is to put a lot of the regulation aside and then think new from the scratch and think what's really necessary and required to safeguard the interests of the people who are living there. Because we are now talking about the ESG conformity, it will be talked about later on, and you'll see that there will be lots of work to be done to keep the old properties fit for future. Nobody knows who will have to pay for this reconstruction or this refurbishment cost. This will also be very interesting in the future. So I think a deregulation to a certain extent, we heard this before and I can only repeat it, would be really advisable from my perspective.
And I just wanted to pick up a little bit on the sort of subsectors within this, because obviously it runs from independent living, like we've talked about, from the age of 55, all the way to hospitals, hospices, those kinds of elements. I guess, do investors see those differently? Plainly, there will be some investors who are used to investing in residential, whether that's purpose-built student housing or senior living or co-living. But I suppose, are there particular subsectors that are creating more interest at the moment? What's your sense of that?
There are some differences in the sectors, and I'm only talking about the Nordic markets now. So when we talk about senior living, it hasn't really found its concept in the Nordic countries. There's no operators in place, so it's typically a purely residential play with individual lease contracts and what it comes with. And that's just not for our typical investors that are used to a long lease agreement with a fairly strong tenant. So we have that division, I think. But then if we talk about a care home or a disabled care home or other types of care and living care, then it's easier to justify, and it resembles a lot. So the story is there, but some of our investors are in it for this demographic play. So if it is for the elderly and there is a story to that generation play, then it's easier to sell and easier to work with. But you would be allowed to do other stuff in that sector. And I think that whole, what we also could define as social infrastructure, is becoming kind of a broader asset class where a part of these things could be a part of, and we have some big funds working in this space. So there will be some competition for some of these players in the future, I think.
Okay, good. Nikolai, did you want to pick that up? Yeah.
Yeah, in Germany we do see a certain focus on assisted living as a alternative for the full inpatient care, because it is less staff intensive, and on the other hand, as we already talked about, it is less restrictive in terms of construction. So it's easier to develop and perhaps easier for an operator to run the business. So right now, especially because of the struggling of the full inpatient care operators, there's a certain shift to assisted living. But to be honest, right now, also in this sub-asset class, we do see only few new developments because of cost increases, etc.
Sorry, go ahead.
Can I also add something? So I've been recently observing a shift from of the type of investors, for example, because since we are moving from more institutional care into more kind of lifestyle and residential, more residential type of investors are getting interested in this asset class as well, because it's more into their product that they normally invest. It's basically these days the lifestyle product is a mix of hospitality, for example, and residential. So it's also raising their interest, and especially that we at MI, we put a lot of effort into into coaching the boards and the senior management of the investors to give them, to provide them with more knowledge, and also I think then to give them more knowledge and also teach them and educate them on the differences of these sub-asset classes, so they can make a conscious decision which kind of the area and which kind of product is the best to fit into their portfolios and their investment protocols.
Good. I wanted to pick up a bit on the financing side, especially because we've talked here a bit about inflation, and obviously what that also means is then rising costs, whether that's for food or energy, and yet maybe potentially a lot of the fixed costs in terms of rental, that you can't necessarily move that up because of that you're dealing with, elderly senior living, those kinds of things. So I guess, how much of a challenge is that? What solutions are there, I guess, from that standpoint to be able to support that? And how are we doing in terms of financing, refinancing issues, those kinds of things? So feel free to pick up any parts of those.
So I think financing for us as an institutional investor is absolutely crucial, because it determines the range with our price we can bid, right? So 2 years ago we were able to bid prices like 4.5 or 4.6% gross initial yield. Right now it's up to 5.5 or 5.6%, because interest rates were rising from 1% to 4.5, or sometimes even 5%. So for us, it's very, very crucial to have good financing conditions to bid in appropriate pricing, right, for the developers.
Richard, you just touched one point, inflation. Inflation is not only relevant for increased energy costs, for example, but in particular the indexation clauses in the lease agreements are really a killer at the moment. So have so many discussions between landlords and tenants whether it's possible to not increase the rent in this amount, or whether to postpone it away just to relax, or to give the tenant more room to move. That's also a very interesting aspect. It's in the contract, so normally you have to raise the rent, but I think there's some willingness of some investors to keep calm at the moment and to not increase the rent and put much more pressure on the tenants.
Okay, interesting. What are you seeing?
I think the payment model from the municipality towards the operators, it's not identically in all the Nordic countries, but it's all based on the municipal owns cost for running a care home. So in fact there is kind of an underlying indexation in that amount that they're paying to the operator. And at least with a fairly big portfolio, we were able to increase rents with the inflation in Finland and Sweden, which amount to 9% last year, and we could give full indexation to the whole portfolio, and we were able to do that, and the tenants are still alive. So that's positive and a good note for us, but hopefully it's not going to happen again, because it could be that it's not sustainable long term. But we have these lease agreements where it's possible to do that full indexation. So that helps a little bit, pointing to the financing cost, where of course the underlying interest has gone up significantly and it's much more expensive. I think the good part is that the financial institutions, the big mortgage banks in Denmark, they also like this segment. They like the story. They like to support the financing of care home beds. So it's still possible to get that 50-60% leverage, but of course it comes at a higher price than previously. But overall, and we have seen also to point at what you could argue next that the operators is losing heavily on this. We have Attendo and Ambea. It's two big operators, listed companies in the Nordics, and big part of our portfolios, and they have both come out with very good results now. So they have been able to offset some of these additional costs with payments from the municipalities.
Okay, good. Dagmara, did you want to pick that up? Because
I'm good.
You're good. Okay, I wanted to come to you a little bit about, because we're going to be looking a little bit about ESG and impact, social impact especially, in the next panel. We've got a presentation in between. But I guess, how do we match consumer demand? Because there's a big focus on well-being. How do we match that with making it an attractive investment? Because I think there's a sense here that everybody agrees that you should be able to create something which gives well-being, which provides the right real estate to match the demand, and be able to do it well, and also still be able to make a profit doing it.
Yes, absolutely. So I think the key element here is that this is such an impactful asset class that accepted investors have a very interesting financial opportunity to build a long-term business with steady returns, with good cash flows, with interesting yields. But at the same time, this is really important that they are able to I'm just thinking, to give back, and they are able to leave some legacy of care and compassion. This is how I would like to phrase it. So this is very interesting that they, and especially in line with the principles for ESG, they are able to build a reputation of an investor who is very much in line, who's very much ethical and responsible. This asset class is offering these opportunities, for example.
Okay, good. And final question to everybody, which is, we're looking at an investment focus here. So where should we all invest? What's your top tip? What class should we invest in if we're thinking long term about this, and what regions?
So I think right now we are focusing on the assisted living part, as I already said, because of its less staff intensive, less restrictive in terms of construction, and it's easier to build new houses for the assisted living. But on the other hand, on the long run, I don't think that we can deny that we need more full and patient care. We have to build more facilities for full and patient care. And I think on the long run, we have to cope with new situations. We have to agree on new shares of qualified staff, etc., especially in Germany. I think on the long run, it will be a mixture of assisted living and full and patient care. But right now, it's more the assisted living.
Okay, good. Anybody else?
I just think we have an interest here in a topic where there's definitely possibility to do some good investments, but we of course have to do it well and find the good solutions. There will be such a big need. We will have a couple of tough years now where there will not be built enough new care homes, and the demography is still increasing rapidly. So in 2-3 years time there will be an even bigger lack. So there's definitely an opportunity, and if you're doing it well, if you're finding the right senior living concept, then I think there's really some great opportunities lying ahead. But with all the potential risk there's also linked to it, then if you're not doing it right, and if you're getting into some of these reputational things, then there is a risk, and it will end up in a bad place.
Okay, good. Anybody else want to make any suggestions? Dagmara,
well,
why not?
Back to my background, if you ask me for the region, obviously I'm going to be biased because I'm born in Poland. I had an opportunity to spend my high school years in Canada and also university in the UK. I've now been living in the Netherlands for 15 years. So I had a lot of exposure how well-organized senior elderly care could be actually operating, and this is something which is really lacking in Poland. and the rest of the CEE region. And I agree with my predecessor, Andrzej from Kido, that he mentioned that that we should really concentrate on long-term care and nursing homes, because this is an essential and basic needs for the Polish citizens. But at the same time, we are also in a process of a transition. So I understand that care and cure is really important, but prevention, this is something that we should concentrate on going forward. Also due to the shortage of staff, because if we are going to educate everyone how to take care of our body better, how to take care about our mental health better, how to become fitter for longer, and just basically concentrate on well-being and longevity, and that we are responsible for our own health and take care of ourselves as long as possible. This is definitely something that we should be looking into, developing lifestyle, assisted living or senior living in Poland. And another factor that comes into place is that kind of shift in a mentality, because Poland is a very traditional country, and so far it was very closely knitted in terms of the families taking care of kids and taking care of the elderly, and this has been changing. This shift has already happened in countries like, for example, Netherlands. So everyone is more reliant on themselves, and it's also happening in Poland. So we should be able to provide these facilities for elderly, whether it's prevention, care, and cure. And I would definitely invite the investors to look into this market and into the research that is available